A couple of years ago, PayPal was one of the most hyped stocks on the market. After the stock market crashed in March 2020, the stock price of PayPal increased almost 4 times from $82 to reach an all-time high of $310 in July of 2021. Since then, PayPal has lost 75% of its stock value, and PayPal shares have almost entered value stock territory. This poses an important question. Is PayPal worth buying right now? Is it a bargain or is it a value trap? To answer this question, we're going to do a deep dive on PayPal, so let's not waste any more time and jump right in. First of all, PayPal's operations. PayPal's main source of revenue are the fees that PayPal charges for completing transactions and other payment-related services. Other revenue sources include foreign currency conversion fees and also fees for purchasing or selling cryptocurrencies. As such, PayPal's business model is based on the volume of transactions. The more transactions, the more fees the company gets. In 2022, users, transactions, and payment volume on PayPal increased. 2% increase in users to 435 million, with 8.6 million new net accounts added. Out of these, 400 million were consumer active accounts, and 35 million were active merchant accounts. PayPal also saw 16% increase in the number of transactions to 22.3 billion, and 9% total payment volume increase to $1.36 trillion on a spot basis, so basically without adjusting for any forex changes. The family of PayPal brands includes brands like Braintree, ChargeCount, Happy Returns, Honey. So PayPal has definitely been establishing their brand presence. I keep seeing an ad for Honey almost every single day, and I'm based in the UK. I think the other PayPal brands are a bit more US focused, or PayPal also has brands like Payday, which is more based in Japan and provides buy now pay later solutions. The gist of it though is that PayPal is becoming more and more established and the family of brands is just growing. Plus, PayPal recently added more features to its complete payment solution for online small businesses. Basically what this solution does is it allows small and medium businesses to accept a range of payments which include PayPal, Venmo, PayPal Later products, and so on. And the latest update actually enabled those businesses to provide Apple Pay as a checkout option, and it also added a few more quality of life features. When it comes to mobile payments, PayPal competes with the likes of Google Pay, Cash App, Zelle, Apple Pay, Samsung Pay, and Venmo, although Venmo is actually owned by PayPal. Now, all of these payment services have some sort of pros and cons, but where PayPal really exceeds is international payments. As you can see, only a couple of the apps that I just mentioned actually support payments to people abroad. Now, PayPal owns Xoom, which is a service that allows users to send payments to people in 131 different countries without the recipient needing the app or even a smartphone. And this is obviously a very big plus, and something that the other apps like Google Pay, Apple Pay don't support. PayPal also lets you send money directly to other PayPal users in over 200 countries worldwide. And again, that's something that Apple Pay, Samsung Pay, Google Pay, they just don't support it. PayPal is also ahead of the competition when it comes to web and website payments because you can complete the transaction by just using the browser. It doesn't matter if it's Google Chrome, Firefox, Edge, whatever. Now, in comparison, Apple Pay also allows you to do this, but they only support Safari on a Mac, and they also need to be very close to your iPhone for it to work. However, Apple Pay, Samsung Pay, Google Pay, they can all be used with smartwatches, and that's probably one of the reasons why they're becoming so popular. I'm not sure whether PayPal can actually be used on smartwatches, but even if it can be, Apple Pay, Google Pay, and Samsung Pay, they all come with the actual smartwatch, so the integration there is a lot better and obviously works in the favor of these apps. In fact, this may be the reason why Apple Pay is actually the biggest and most popular mobile payment service in the US. 43.9 million people have used it at least once, and surprisingly, Starbucks is the second most used mobile payment service in the US with 31.2 million people. And I know it's a bit weird, but hey, that's what the data says. Then we have Google Pay with 25 million users and Samsung Pay with 16.3 million users. Now, I'm surprised that PayPal isn't on there because I'm sure that they have at least 16 million users in the US, but maybe this is a slightly different statistic. But again, this is in the US, this is not worldwide. if we actually look at usage statistics worldwide, we can see that Alipay is number one with 650 million users, followed by WeChat Pay with 550 million users. Then we have Apple Pay with 507 million, Google Pay with 421 million users, PayPal with 377 million users, and so on. Venmo is included in this and they have 52 million users, so if we combine these with PayPal's users, we get roughly 429 million users, and that actually puts PayPal ahead of Google Pay. So basically, it would make PayPal the number 4 most used mobile payment service worldwide. I have to say that with Alipay and WeChat Pay, these are pretty much only available to Chinese nationals, and their market share is really massive in China, but it's tiny or pretty much non-existent everywhere else. So really, if we're talking about worldwide payment services, Apple Pay, Google Pay, PayPal, these are the top 3. Looking at the actual users, PayPal is the number 2 out of those 3. Now, Apple Pay and Google Pay obviously have a very big advantage over PayPal, and the reason behind that is that they actually produce their own hardware. PayPal doesn't have any hardware of its own, they don't have any smartwatches, they don't have any phones or anything like this, whereas Apple and Google do. So that's a very important point of differentiation between the 3 of them, and really that is one of the biggest challenges that PayPal faces right now. Having their own hardware would allow Apple and Google to push their own mobile payment services, and that would obviously work against PayPal. So obviously PayPal needs to find other ways to differentiate itself. Now, it would be really good if we could see the official total payment volume through these apps and compare it with PayPal. It could be the case where, because the payment apps are installed by default, it seems they have a large user base, but in reality, users don't use them as much as PayPal, or they just use them for small purchases. The closest stats that I could find were covered in this article here, and the article is from September 2022, so it's not latest data, but it is recent enough. Recent research basically highlighted that Apple Pay had a volume of $6 trillion in annual processing. This is a lot. In comparison, PayPal's total payment volume was $1.36 trillion, so this is almost 5 times bigger than PayPal. In comparison, Google had about $2.5 trillion in payment volume, which again is almost twice as much as PayPal. That's a lot, obviously. But the drawback of this research here is that it's not official data. This data is compiled using data credited to comparison sites like trading platforms and so on, so it may not be very accurate. There are also disagreements over what exactly constitutes Apple Pay and Google Pay traffic, and in most cases, as we can see in this article here, Apple Pay is not the payment method, but instead is the conduit to make the payment. So essentially, it could be that users are just using the wallet options for convenience and they're just paying with their credit cards through the wallet option, instead of paying with the actual digital payments app. Again, we don't know the exact transaction volumes, and these are all just kind of speculations and cross-reference and matching, even though they're very interesting in kind of giving us an idea of how big those apps are. They're not official statistics and they should be taken with a hint of salt. Still, the market for mobile payment apps is growing. We can see that the transaction volume has grown from just 550 billion in 2015 to over 1.7 trillion in 2021. We can also see that the users of those mobile payment apps have grown from 0.4 billion users in 2015 to almost 2.1 billion in 2022. Obviously, there is a lot more market share to be captured there, and PayPal is in a very good position to do that. PayPal is a viable competitor to Google and Apple, but what are the financials of PayPal? Are they profitable? Are they efficient? What is the case here? To answer these questions, I will look at PayPal's current and historical metrics and compare them to the company's peers in the transaction and payment processing sector in the US. Quick note on the sector metrics. This sector is dominated by Visa, MasterCard, PayPal, Fiserv, Block, and Fidelity National Information Services. These 6 companies make up 77% of the total revenue in the sector. Meanwhile, 18 of the 35 companies in the sector are losing money. Basically, take the sector data with some hint of salt. I want to provide some comparisons for PayPal, but at the same time, we have a duopoly of Visa and MasterCard at the top and a lot of new players at the bottom. Okay, with that in mind, let's look at profitability. PayPal has a gross profit margin of 42.35%, which is below its 5-year average of 45.79% and the sector median of 47.32%. The net income margin of 8.79% is also below its 5-year average of 14.58%, but above the sector median of 0.57%. Their levered cash flow margin stands at 12.1% compared to its 5-year average of 14.58% and the sector median of 4.73%. Finally, the return on equity is decent at 11.5% compared to the 5-year average of 16.7% and the sector median of 11.05%. Overall, PayPal is doing well. Their metrics have declined over the last few years, which is a bit worrying, but the change has not been that drastic. It's good to monitor these metrics though, because this could turn into a red flag if the trend continues downwards. Despite this, analysts are expecting a steady growth in earnings per share over the next few years. The consensus is 18.33% in 2023, followed by 15.28% in 2024 and 13.07% in 2025. In fact, analysts have recently started revising their expectations up, which is a good sign. Basically, the sentiment towards PayPal is improving after a year and a half of declining expectations. This type of expectations change often leads to a reversal in stock price, so this is one reason why I am turning bullish on PayPal. PayPal has historically shown really good growth in revenue and earnings. Their compounded annual revenue growth is 17% since 2013, with their revenue going from 6.727 billion in 2013 to 27.518 billion in 2022. Their compounded annual earnings growth is 10.9%, with earnings growing from $955 million in 2013 to 2.42 billion in 2022. By the looks of it, this type of growth can be sustained for at least another few years. Now, this is really good, mainly because the stock has lately been priced as a value stock. PayPal's adjusted PE ratio is 18.15 compared to the 5-year average of 41.72. Their adjusted forward PE ratio is 15.34 compared to the 5-year average of 37.94. Most importantly, their price to earnings growth ratio is only 1.1 compared to the 5-year average of 2. Their forward price to book is also relatively low at 3.74 compared to the 5-year average of 8.1. Finally, their forward price to cash flow sits at 11.84 compared to their 5-year average of 27.4. The way I see it, there are two reasons for this valuation. 1. PayPal had a massively inflated stock price in 2021. Typically, you see a corresponding massive drop in price after this type of jump in valuation. Overreaction in one direction leads to overreaction in the opposite direction, a bit like a pendulum. This creates an amazing buying opportunity, and I think we are seeing this right now. The second reason for the low valuation could be that investors have different expectations to analysts. Even though analysts expect a steady growth in earnings and profits, maybe investors don't see it that way. Maybe there are some risk factors that analysts are overlooking. That's valid. Looking at PayPal's annual report, we can see a lot of factors that the company identifies. Cybersecurity is a crucial one, increasing competition is another, you also have legislation and compliance risk, you have risk to do with credit, third parties, and so on. A lot of these are just regular day-to-day business threats that a financial processing company faces. The main risk in my eyes is the increasing competition from Google and Apple. However, PayPal has some advantage there because it is mainly a financial company. Google and Apple have other, more important business units, and I think that Google Pay and Apple Pay are not as important to these companies as their core businesses. In comparison, payments and transactions are PayPal's core business. Cryptocurrency is also a growing risk, but I don't think it poses that big of a threat to PayPal right now. Maybe in 5 years or so. However, PayPal has been active in allowing users to buy, sell, and transfer cryptocurrencies. Plus, users can actually use PayPal to pay in crypto, although there are improvements that can be made there. Overall, I think we have a good bullish argument for PayPal. The valuation is really cheap. We are seeing some of the lowest prices since December 2018. Even the company itself has committed to buying back a lot of shares because of the cheap price. In 2022, PayPal bought back $4.2 billion worth of shares, or about 80% of their free cash flow. The management has said that they think share buybacks are an excellent way to return capital. And I agree. They estimate that 75% of the free cash flow in 2023 will go towards share repurchases. In my opinion, this will create a bullish pressure for the company. It will reduce the floating stock, it will increase ownership for existing shareholders, and it will boost metrics. In terms of target price, the analyst consensus right now is $103.4, or about a 38% upside on the current price of $75. I think that's a reasonable target for the next 12 to 18 months. What do you think? Is PayPal a good purchase right now? Have I missed any important details about their business? Let me know in the comments below. If you think the research is good, please like the video and share it around. Thanks for watching, and I will see you again in the next video.